Guys, in today's video I'm going to be telling you the main two things I focus on when trading. So hopefully this will be a very valuable video for you guys. Watch to the end as well, because we've got lots of slides that hopefully should be valuable, that anyone from different levels, whether you've been trading for a couple of years or you've just started trading, hopefully this video will be valuable to you and you can learn something. So this is going to be the two main things that I focus on more technically. You know, I can make another video if people want on the mental side. Obviously trading is a lot of technical analysis. The strategy side, and then there's the mental, psychological side. So this is going to be more on the strategy side and the technical side. So yeah, let's get into it. I hope you guys get value. So the first main thing that I focus on is higher time frame narrative. So that, in terms of time frame, we'll look at the daily here, but it can vary based on if you're a shorter term trader or a longer term trader. But for me, for this example, we're going to look at higher time frame narrative, but on the daily time frame. So for me, the first thing I'd look for is, what is the daily telling me? What happened yesterday? What happened? What has previous price action told us? And then I learn about daily directional predictions. So as you can see from this example down here, once you're at an area, and I won't go into too much details in terms of strategy in this video, but hopefully you guys can learn some stuff by picking up some of the things I say. But once you know that you're in an area of value and an area you want to trade, then you want to look at what the previous day or that today's price said. Like, what was it telling you? So from this example, you can see that we're at this key level here, these highs, and we had a bearish day. So the daily directional prediction would be, I'm predicting, because obviously in the markets you're just predicting, is it going to go up or down? If it goes up, you want to buy. If it goes down, you want to sell. So DDPs are the prediction of the next day. What do you think is going to happen? So here, if you think, okay, it's likely to sell off because we're at this key level, we had a bearish day, you know, bearish engulfing candle, which shows bearish momentum, you then want to predict, okay, the next day we're looking to go short, which obviously happened in this example. You know, we sold off. So once you can predict and get good at predicting the next day's likely move, then you have to ask your question to yourself, how can I capitalize on this move? If you can get accurate, and again, you won't ever be 100% because no one's going to predict everything 100%. But if you can get good through the back testing of, okay, I predict today's going to go up because of this, 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 and this, or today's going to go down because of this, 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 and this. If you can get that accurately predicted, the questions then you have to ask yourself is, how am I going to enter that move? If you got the direction correct and you predicted where it's going to go, now how can I capitalize on that move? So DDPs are extremely important. Like I said, that can apply to any time frame, but higher time frame narrative is extremely important because that usually has a bigger picture and can give you an idea of where you are in the market. If you zoom in too far and don't take into consideration the higher time frames, then you're going to struggle to get an overall perspective of what the markets are saying. So once you've done that, you want to look at what phase of the market are we in. So are we in a trending environment, or are you in a pullback phase of the market? So as you can see from this example, we were in an upward trend, making higher highs, higher low, higher high, higher low. We then didn't continue to make the higher high. So we broke down, lower low, lower high. So now we're looking for the movement to the downside. This would be a trending environment. We're in a downward trend now, and we're looking for this momentum to continue. We've got this bearish candle at a key level, back at an area of value. So the DDP, the next few days, we're predicting this to go down. Does it have to go down? No. But we're predicting, okay, well, is this more likely to go down than up? But that's in a trending market environment. With this example, we're taking sells, but we're in an upward trend. You can still do that, but you just have to be aware that it's the pullback phase. So as you can see, we're just ranging here, making equal highs really. We're just moving sideways, and we broke out higher high, higher low, higher high. So we're in an upward trend, but we're looking for the movement to the downside. And you can still, again, that's what I'm saying, you can still make decisions and still take trades, even if it's sort of against the trend, so to speak, so long as you're aware that we're in an upward trend, so the momentum is to the upside. But look, we're overextended. We've had the bearish momentum come in, so all we're looking is, right, what's likely to happen for the next couple of days or the next day? It's more likely to look to head have the next day to be bearish. And if we can predict this move, like I said about the DDPs in the previous slide, if we can predict these moves, if we can predict the next couple of days this is going to likely to head to the downside, then it's how are we going to enter this market. Same with this example. If we're overextended, we're maybe at a key level or key price, we're at a higher price, we're likely just to maybe some profit takings being done, and we want to look to short from here, and we predict, okay, it closed like this, the next day we're predicting it to go lower, then it's how do you get into the market. So this is where scaling into the lower time frames occurs. So for me, if I trade the daily time frame, I'll enter on the 1 hour. My trading, I trade like that, but I also trade if on the hourly. So if I want to do a bit more shorter term, bit more quicker trades, intraday trades, I would do the exact same thing I do on the daily with the hourly. So let me reiterate this. If I'm predicting the moves on the daily, I'll enter and scale into the lower time frame of the hourly. If I'm predicting the hourly moves, not the daily moves, the hourly moves, I'll enter on the 2 minute. So they sort of correlate with each other, but don't mix it up. You know, trade the daily and the hourly, or trade the hourly and the 2 minute. But for this example, let's just stick with the daily time frame predictions, DDPs, and then entering on the hourly time frame for an entry. So it's very important for everyone to be aware that a run on a higher time frame is a trend on the lower time frame. So on this daily time frame, each one of these candles, as you can see here, 1, 2, 3, 4, 5, 6, this whole movement down, each bar, each candle is a trend on the hourly, as you can see on here. And again, I hope if you guys don't understand the term, like what trends are and how to identify trends, I can make another video on it. But essentially a trend is a lower low, lower high, lower low, lower high. The markets continue to make lower lows and lower highs. An upward trend is the market makes higher highs and higher lows. So as you can see from this movement, just these few candles to the downside, each one of these candles, these daily candles, makes up a sample of hourly candles. And this whole movement, each bar, 1, 2, 3, 4, is a trend. You can clearly see this movement down was lower low, lower high, lower low, lower high, lower low, lower high. So my point I'm trying to make is when you're then looking for the next DDP, if it's been going down and you're predicting, so this would be a pullback move because we're in a downward trend. We've now looking to buy, but we're in a downward trend, but we're overextended. You would be looking to enter once we've got the DDP and we think, right, today's price action is likely to go up. You're then going to look for a trend change so this aligns with this DDP. I hope you guys are following. So we predicted that this is a big bullish candle in a downward trend. We want to look for a quick move. So as price come down, we then made a new trend change, higher high, higher low, and then you'd look to enter however your entry model is, but you'd look to enter and take the momentum to the upside. It's the same with this one. So that was the pullback move example. This is the trend continuation example. Price has been in a downward trend. We broke out lower low, lower high, lower low. We sort of corrected, but we're over on a downward trend. So if we're predicting this next couple of moves to go to the downside, the trend to continue to the downside, what will this mean on the 1 hour time frame? If this is going to continue to go down, this 1 hour has to be trending in a downward direction as well. So at this point, we're looking for the continuation to the downside. We broke out lower low. We sort of corrected, but then we started to continue to make lower low, lower high, lower low, lower high, lower low, lower high. So then you have to find an entry model on these lower time frames, which will align with this daily. So I hope you guys are following and understand this. Let me just say that one more time. A trend or a run, or each one of these 1 hour candles is a trend on the lower time frame, on the 1 hour. So if we've been going up for a while, this will mean the 1 hour has been going up in an upward trend. So now if we're looking to take the continuation to the downside, we want to look for this trend on the 1 hour to change, which we did here. We broke out lower low. Maybe you'd enter around this level, put your stops. Again, I'm not going to say into exact stop losses and entry models, but the point is, once you found your entry, this should, if this move is going to continue to the downside, this 1 hour is going to continue to the down. It's going to be in a downward trend. And the same as if it's the other way around. If you're looking for buys, this is going to be an upward trend. So overall market direction, up or down, and then look for DDPs predicting for the next couple of days. Is this likely to go up or down for the next couple of days? If it's likely to go up, you want to look for an upward trend, or your thesis to be supported with an upward trend on the lower time frames. And if you predict it's going to go down, you want to look for a downward trend and enter on a downward when the market's in a downward trend. Order flows to the downside. And lastly, once you've got your DDPs, your daily directional predictions, you're predicting in the next few days it's going to continue in this direction. Then you've seen that the lower time frames you've scaled in, and that also aligns with your market direction, your predictions. It's so important to have good risk reward, because that allows you to be wrong. Because you know you're never going to be right 100% of the time. No matter what people say about, oh, I have a 95% win rate or I don't lose, everyone loses. Even the best traders lose. So it's important that when you have, if you have good risk reward, it allows you, if you take a couple of losses, that if you make more, so for me, I like to have at least 1 to 2. So if I risk 1, or let's say I risk £100, I'm going to make 200. If I risk £10, I make 20. If I risk 1,000, I make 2,000. So you're doubling at every trade. You're making double than what you're risking. There's a lot of people that say about, well, yeah, if you have too big risk reward, you're going to have a lower strike rate. So you look at these smart money concept traders you might see on Instagram, and again, I'm not going to criticize them. Everyone has their own strategy, but what I've seen from personal experience is if you have a risk reward of 1 to 50, you're making 50 times your money, or 1 to 30, or 1 to 25, the chances of that actually playing out, it might look good, like this looks really good, wow, look how he risked this amount to make this amount, but that's one example that anyone can cherry pick. The reality is how many losses will you take in a row? And psychologically, how can you deal with taking that many losses before you get one big winner? So if you have too big risk reward, you're going to have a lower strike rate. You're going to be wrong. If you have too big risk reward, you're going to have you're going to lose more often. If you have a better risk reward, say like if you have a 1 to 20 risk reward, the chances are you're going to take, the strike rate is going to be a lot lower. If you have a lower risk reward, the strike rate is going to be a lot higher. I wouldn't advise even negative risk reward, so risking £100 to make 50, 1 to 0.5. It's down to the individual, but personally for me, if I have a 1 to 2, if I take 4 losses in a row, I know I only need 2 winners to get back to break even, and psychologically that's better, because taking 4 losses can occur with any strategy. So I know all I need is 2 good solid winners, and I'm back to break even, and then psychologically you're back to square one, and then you can keep growing. I just like having 2 to 1, but that's just personal for me. So let's quickly recap. Higher time frame narrative, you want to predict what's happening on the higher time frames. So in this case, the daily time frames, you're predicting the next daily moves, what's likely to happen. Are we likely to go up or down? That's all we're trying to do. Today, is it going to go up? Is it likely to go up today for this session, London session, New York session, or are we likely to go down? Once you've identified, okay, this, like for this example, we're likely to head down to the downside, what we're going to do, scale into the lower time frames and understand what phase are we in the market. So are we in a downward trend or are we in a pullback move? Are we overall trending on the daily? So we're going to go with the momentum, or are we going against the momentum? Both are correct, but you have to trade them slightly differently because there's more risk on this position because we're in a buying market and we're going against the tide. This is going with the tide, so it's more likely to play out. They both can be profitable, but you have to be aware of that. Once you identify DDPs and what phase are we in, you scale into the lower time frames to look for an entry. Again, a run on each one of these candles, a run is a trend on the lower time frames. The daily time frames, each daily candle, 3, 4, 5 daily candles will be a nice trending. If you have 3, 4 daily candles going up and up and up, or down, so 1, 2, all this going down, this is all a downward trend on the lower time frame, and it's the same the other way. And lastly, once you're scaled into the lower time frames, got your entry and it's all aligned, you want to make sure you have good risk reward so that if you are wrong on the position, which can happen, then if you're right, you can make good, double your risk, and that way if you have a couple of losses in a row, like if you have 4 losses in a row, if you have a 1 to 2 risk reward, you get back to break even. Psychologically, you feel, it just helps psychologically because it's extremely difficult to take trades I personally found if I had a few losses in a row, it'd be difficult for me to continue to take trades because I'd fear, what happens if I keep losing? So it's important to have a good risk reward that, when I win double or triple my money than when I lose. But just make sure you don't have too big risk reward because it might look good, like hypothetically, but in reality to hit those big 1 to 20 trades. If everyone did that, they wouldn't even need to trade anymore after a year because they'd just make so much money. So that's not the reality. It looks good for marketing, but just be aware, too big risk reward can affect your results because you don't win. You constantly get stopped out. So I hope you guys got value from this video and learned something, or just enjoy this type of content. If you do, please do like, comment and subscribe. I'd appreciate that. We're growing the channel, so I appreciate the support on the videos. Let me know your thoughts down below. And yeah, thanks guys. I'll catch you guys in the next video. Cheers.